So with the markets being extremely volatile in the past couple of days, we're starting to see 100-point ranges on the S&P 500 like it's a daily occurrence. And I had the opportunity to speak with one of my new members in my room during our coaching session, and they had asked me, how do you transition from bullish to bearish, and what are the key things that you look for? So in today's focus, we're going to be focusing on indicators as well as a little bit about a premiums, but the main focus is on indicators that we use to look into when we see a huge reversal or detail that's going to be happening in today's focus. So let's go into great details and let's get this started. But before we do that, I want to give you guys an example of our trade log and what we managed to cultivate during our time that we were trading today. So let's go straight into it and discuss this. Okay. So there's a variety of indicators that are available on TradingView and many different sources, but finding the right indicator can sometimes be very troubling. Now, from my personal experience, I like to keep things really simple here, although my chart looks a little bit complicated, as you guys can see here. But the whole thing that I have is that this is my daily chart here, okay? The purpose of my daily chart is pretty much to view things from a daily perspective, okay? Because with the market, you want to make sure that you have the opportunity to find the perfect entry points as well as find the perfect exit points. I usually look at this side from a 5-minute point of view, and on my right here I have my weekly point of view. Okay, as many of you guys already know, I give my weekly predictions right over here. Okay, so these weekly predictions are timestamped and they're provided to my members prior to the start of the trading week. This really sets the tone for what's to come in our trading channel, and we give predictions on our estimated weekly lows, on our estimated weekly highs, and also give key inflection points that you need to look for during the beginning of these entire week here. So for example, we'll go over our analysis on Nvidia here, which is going to be one of the key stocks for today here. Now, when SPX first started, so this is the beginning of the week, pretty much you see this big wick up, but Nvidia opened significantly lower. It opened from, it closed the Friday at around 107, and it dumped all the way down to around the low 90s, okay, as you guys can see right over here. So that was more than a 10%, close to 16% move right off the bat that Nvidia was moving from Friday close because of the whole Japan carry-on trade and so forth. And we definitely made a lot of money when we swinged our puts over the weekend. But regardless, pretty much you see over here that our estimated weekly low was around 94, and that's where Nvidia was close. It was off by a couple of dollars here, but these levels based on gamma points are very hard to break, okay? And they're very strong support zones. So around here is pretty much where you want to avoid taking any shorts, and it also gives you a great opportunity to buy calls on the dip. And that's exactly where you see Nvidia start to go, and it looks like it's pretty much going to retest that as well. It closed in a bearish breakdown, so it looks like it can retest this 94 and possibly see this as well. So looking at this from a weekly point of view gives me the overview of how far and how close Nvidia can go. Now, this is a great tool moving forward for all my traders here, because it allows you to pick the strikes that you can move to. And this has to do with premiums, because if, let's just say, you know, you are looking at Nvidia here and you want to play the pop, you know, you can get a 102 strike, a 106. You know, the furthest max is 117. That's a little bit far, and that's probably worthless, but you want to find the premium that is within your budget and within the range if you decide to play any sort of reversals on this moving forward. So that's why this weekly point of view is going to be very key here. Now, another thing as well is my SPX chart over here. My estimated weekly low is around 51.40. So that's exactly where SPX opened by. You can see that there's no time, there's no edits done here. This was given on Sunday, a little bit late. I was busy this week, but you can see that 54.20 was my estimated weekly high, 51.40 was my estimated weekly low, and there's no edits done on this well, and the chart matches exactly 51.40 as per what you see over here. Now, this was a great opportunity to take calls and so forth as well. And now SPX was pretty much at my chop range right over here, and this was a perfect opportunity to short. It pretty much closed around my weekly level over here. Okay, so that's the weekly point of view, is looking at this detail so that way you can see the bigger picture. Where are the key inflection points that you need to sell, buy, and so forth, to pretty much get an idea about what's happening about the market overall in general. So this is what we pretty much focus on. Now, back to the daily point of view. So in the daily point of view, my weekly analysis is always here on Saturday and Sunday, but my daily point of view, this is basically the key inflection points that I give my members on a daily perspective. So on a weekly perspective, we analyze gamma inflection points from the weekly strikes, but for the daily levels on SPX especially, it's based on the current OTD expiration. So as you guys can see over here, this is timestamp 739. We put our level 1 bullish at 53.30. Now, for many of you guys that are watching this for the very first time, my level 1 bullish is a resistance towards the upside here. Okay, all these levels that you see over here, they have a specific meaning to them. Level 1, for example, is a gatekeeping number, meaning that it's usually the top of the chop range. Usually this is the best opportunity to short if it hits within the first 30 minutes to an hour, because it's like they fake out where the market pops and then it dumps right after. So as you guys can see, 53.30 was the exact high of the day, right to the penny, right over here. Okay, that's where the market gamma level started over here. Okay, now my chart looks a little messy over here, but I pretty much gave that 53.30. SPX opened approximately at around 5,300, and then it popped 30. And the best part here, guys, is that I even mentioned it in my Twitter feed over here. Okay, so if you guys look at my Twitter from the morning open, you guys can go over right in the morning open. I mentioned right off the bat here that, let's see, okay, so SPX was 53.17, and I mentioned that the next resistance is at 53.30. It hit the 53.30, started to see a pullback. We had amazing trades on UPST and all of that, so that we're doing very well. We were pretty much banking on all our levels, so we're crushing it there. And we seen that resistance. We sold our meta. We sold a lot of calls to the top, and then we transitioned to the downside when we start to see weakness here as well. Now, going back to the trade log here and talking about the indicators, so we knew that right off the bat that the market would transition to the bearish side as well. Okay, now let's look at our trade logs to get an understanding about premiums as well. So for today, we started off with the day that we knew that meta premiums were too high. The meta calls that I was looking at, the 215 to entry, they were basically at $5-6, but we wanted them at 2. So we gave them, the members, a advance notice at 9:30 that we want to place the order to buy meta 215 calls at 2. We also placed a GS order because we liked banks based on the Bank of Japan. You know, traders were saying that, hey, the carry-on trade is done, which was not correct, because all the Bank of Japan really pretty much said is that they would delay hiking rates until markets are stable. Doesn't mean it's done, just means it's going to be delayed. So that's just pretty much sweeping the problem under the rug. So we placed those orders because the call premiums were too much. We were looking for a dip. Okay. So we bought UPST because their earnings were good and this stock was going. This trade went from 1 to literally $5, but we sold a little bit early. We took our profits. You know, the market looked weak, so that's why we did it. Our metas got a fill at around 10 o'clock, as you guys can see over here. When they filled, they actually went to 40% very quick. This is our A+ setups where you give an advance notice and they run. We sold it for 25%, which isn't so bad. You can see our UPSTs were up 60% by then. I sold my UPST because I noticed a little bit of weakness in the market. We also had our SMCI puts from yesterday, which was also up a lot, right? So doing very well in the market. And then we got our Tesla 190 puts. as well. You can see our SMCIs are there. They were up 150%. We got the fill on the GS calls, and then we sold that as a scalp from 1.9 from 1.5, and that was perfect to sell. We got our SPX puts, and pretty much we banked all day. And you know, we try to buy SMCI puts, and we sold a Carvana and all of that. Okay, so that's basically the gist of it. No bad play in the room. We even gave amazing small account trades with our QQQ put in the room, and that was very helpful as well. So the QQQ trade, okay, perfect. So the QQQ 435 puts, these were at 1. We gave a range based on the analysis here, and we'll talk about that shortly. Okay, these went to 5 from 1. So let's talk about the indicators that we use. Okay, so on the daily, pretty much what really helps is if you guys are familiar with Zach Morris, I've been using his indicator, this Zach Attack motherfucker that you see right over here. Very great indicator to use to help me pretty much figure out the zones. It also helps me understand when the premiums like you know, it helps me avoid chasing. Okay, because if you're at a supply zone from where you see over here, like here, this is a supply zone, and they're aligned with my premium model here, because this level 1 bullish, which is a strong rejection point over here, also aligned with the indicator showing me that this is a strong selling point. So that's when we knew to pretty much short. Throughout the entire day, we start to see more weakness in the market. You can see that the market was moving in the bearish EMA cloud over here. You see that the MACD on the 5 minutes was bearish, giving that bearish momentum. And if you guys do the replay over here, let's look at it from a replay point of view. Is, let's say if you were to short at this point, we do the sell and then we do the play, right? How does that look? Okay, so we've seen that level 1 bearish inflection point start to move. You notice that market weakness here. The Zach Attack indicator started to notice that this is a supply zone right off that point. You can see that that red detail was given right after. That's when you start to see weakness here. That's when you know exactly that you need to take a short, because once this was here, the top level 1 bullish inflection point, you start to see massive weakness down here. You've seen a retest on the stocks where it started to go back in the supply zone, and right there, that's when you start to really fail, and that's when you start to see a massive decline right there, and that's where SPX goes. SPX started to test my level 1 bearish inflection point, popped right off there, hit the EMA cloud, and then boom, right back down right here again. And this is a demand zone. Okay, this demand zone was also aligning with my 5192, and this is exactly where my inflection point was, right over here. So you guys see that huge pop, best time to take profits on your puts, you know, and it was near close right over here. You've seen the transition on the momentum from the bullish to the bearish side, and that's boom, congrats trader, you made some money. Okay, so that's how we are using our indicators, our information. We're aligning our 5 minutes with our 30 minutes, and that's how we part of the reason why we see a lot of success. So I hope you guys enjoyed this video update of how to use this indicator. If you guys want more information on getting my analysis, my predictions, and all of that, definitely available in my mentorship program. But this indicator is great. I love it. I love that I can align it with my overall premiums as well. So stay tuned for more, guys, because we have a lot of education coming down. We literally nailed it this entire with 5 perfect trades, all these trades ideas that are hitting, and we transitioned from not only having a bunch of calls that we set limit orders, we banked on calls and puts, and the only way to do it is pretty much having the right information, the right guidance, because the weekly analysis is something I planned before the start of the week. It helps you find the right premiums for the job. The daily analysis is what helps me plan for my execution, my entry point, and my exit point as well. So check the link in the bio, join our mentorship program. If you guys want a trial and see for yourself our consistency, accuracy, no problem, I'll definitely give it to you. But we are a mentorship focused room because we provide coaching. So I coach you personally, and we also have courses available where in our room, if you join our room, there's a bunch of courses here that we update continuously, and you get the capability to book your one-on-one call with me as well. Check the link in the bio. And the first month payment is definitely 50% off if you use the promo code. We'll see you guys in the chat. We're here to make money. We're here to make you guys successful. And we're here to get that money. So let's get that money. See you guys on the inside. Please like and subscribe if you like this content. And we look forward to our next market update, which is going to happen tomorrow.